Hello everyone and welcome to another edition of Triangle Investor Interviews. I'm your host Lucian Valkovic, and before I announce my guest, just a reminder of a disclaimer. This interview and all my interviews are not a recommendation to buy or sell any shares, products or services. Always do your due diligence and consult with your financial advisor. We are joined today by Colin Healey, CEO of Premier American Uranium, and Greg Huffman, CEO for Nuclear Fuels Inc. Gents, delighted to have you both here today. Welcome.
Thank you very much, Lucho. Good to see you.
Thanks, Lucho.
Thank you. You both have a deep uranium sector experience. Colin's background as a mining analyst and with a focus on uranium, and Greg's geological and financial expertise from roles and Canaccord Genuity and Scotia Capital. So ideal fit to talk about the uranium market first. Colin, the first question goes to you. The uranium market is changing, I would dare to say. We are seeing signs of recovery. The spot market is above $70, I believe $72 as we speak. My question, given your extensive experience in the uranium as a uranium analyst, what are the key macro trends, such as geopolitical factors, domestic energy security, and global clean energy goals that you believe would drive uranium prices over the next, let's say, 5 years? I know it's a pretty big question, but give me your take, please.
I think you did a good job of hitting on what the key macro trends are, with that preamble. But for sure, in the next 5 years, it's a shorter window. New reactor construction starts. We saw the US say, by the end of the decade, they want to have 10 new reactors under construction. I mean, that's a really important thing, because we know that the uranium for those probably isn't procured, and typical, gigawatt reactor loadings are 3 times the annual consumption. So a robust new reactor pipeline is always a great catalyst for uranium price. And we outside of China and a little bit Russia, we haven't seen that like a really robust new construction pipeline in a little while, and this is really kind of new and quick, so I think that could have a lot of potential impact on uranium pricing. Beyond that, politically, we're seeing fantastic support for nuclear for all the reasons that we've been talking about for years. Emissions-free baseload power. We're seeing that across Europe, but now across the focus on that in the U.S. As kind of a new potential catalyst, I think. And we're seeing a lot of support for the nuclear fuel cycle within the U.S. government, which suits us really, really well. Between nuclear fuels and Premier, 12 assets in the U.S. Across 5 states. I think the portfolio is really coming together to position well for the U.S. domestic catalyst. Big tech is another factor that is having it's a real accelerant to what I consider great potential from SMRs, for example, because the risk, the traditional infrastructure builders we talked about before have a different capital cost than big tech, there's a lot of very, very strong balance sheets in big tech, and they're interested in seeing SMRs accelerate and get deployed, and they're not borrowing money to do it. So I think what you get from big tech is kind of you get financing for the first round of something that could be considered fairly risky from a financial perspective, and then what you come out of that with 5, 6, 7 years later is a template for a bunch of new SMR construction with much better cost certainty, much lower operational risk. So I think, I've said it 100 times, but right now we've never seen a macro environment with a short-term, mid-term, and long-term thesis like we have right now for uranium. It's just much different than past cycles.
Couldn't agree more. Greg, you have emphasized the strategic importance of developing new uranium resources in the United States to address growing concerns about global supply chain reliability. What specific challenges do you see in the global uranium supply chain?
Yeah, and I think that's something that's really key. Like back in the 70s and into the 80s, the U.S. was self-sufficient from a uranium production perspective, and we really think that that's going to be a trend that we see. The U.S. attempt to move back towards. Now, full self-sufficiency is probably a bit of a ways off, but really, if we look at recent production over the last few years in the U.S. of sub 1 million pounds, probably going to 2 to 3 million pounds here over the next year or two. So we really think that there's got to be a big push towards growing the domestic uranium production in the U.S. And really, the current price that you talked about, sort of the $71, $72 spot price level, that's what we need at a bare minimum. We really think that the price is going to be pushed higher as we see that build out that Colin talked about in terms of the domestic U.S. reactor fleet, with the growth not only just from sustaining the current fleet, but from the growth that we're going to see. And really, as the U.S. sort of looks to develop that self-sufficiency, it's going to be, a move away from sort of some of the more recent traditional sources for uranium supply. And that's going to be sort of self-sanctioning, and it's going to be mandated sanctioning as well over the next while. So we really think that there's a fantastic opportunity right now for the creation of a U.S.-focused uranium exploration and development company in the combination of Premier Nuclear Fuels.
Also, good point. However, the U.S. production is very low. U.S. has seen increase in the domestic uranium production in 2024, with, of course, Wyoming leading the charge. However, secondary supplies like programs like megatons to megawatts have historically played a large role in meeting U.S. demand. With such programs winding down, how do you assess the current balance between the primary and secondary uranium supplies in the US? Whoever wants to reply that, Colin or Greg.
Sure, I can field that. I mean, secondary supplies have always been information that we get on a bit of a delay, so it's hard to tell. Are we in an environment where underfeeding makes a lot of sense? It's going to create additional kind of U308 that doesn't report to an enrichment process? I don't think so. I think that right now secondary supplies are probably tempered to around 15 to 25 million pounds, give or take. For that, that's kind of my back of the envelope guess for 2025. But they're always a factor. But I think secondary supplies are now does not bring us to a fully supplied market. And what I see is a lack of new large-scale uranium mines in the next 3 years. And so to be undersupplied by any measure that I can come up with for the next 3 years, I think we're really on the precipice of a pinch point that we've been waiting for a long, long time. When the Sprott Physical Trust really got aggressive about buying, we saw, coincident uranium price increase to 107. As that aggressive buying curtailed, we saw it come back to $70, but we never saw it go back to 35. We know that a whole bunch of inventory has now been sequestered. It's hard to tell exactly what the inventory is that's fungible, that's available. If there's a rush on buying, 10 new reactors in the U.S., that could mean 10 million pounds of additional buying that we're not expecting. Possibly slightly more, and so I think that it's hard to tell by just watching the spot market where the pinch point is, because we see it go up and we see it come back, and when we see it really move quickly, I think we know that there's trouble with procurement. People are really holding on to pounds. We know that the utilities mostly buy in the term market, but term contracts are more and more hybrid contracts, with a lot of the component being settled in the context of the spot price in the future. So the spot price might be 90% non-utility or non-end user buying, but it is important in terms of what the utilities pay. So we need to pay attention to the spot price. And I do think that as we see the inventory getting further and further curtailed, that we're going to see the spot price move a lot. And I think that's going to trigger utilities to get either maybe balance some of the additional buying that they need in the spot market, but also more aggressive contracting. And I think that's going to shape the structure of contracts going forward too, because there is like I said, even though the spot price isn't where in the spot market isn't where a lot of the activity is happening, the spot price does have influence over what contracted material is transacted at in the future. So, I mean, it's a roundabout answer to a question, but I think that as soon as I think we're going to be able to read in the spot market, unless we have a physical inventory trust doing aggressive buying, we're going to see a more progressive increase in the spot price that isn't so violent. That's going to be the key indicator that we've cleaned up the inventory, and now pounds are becoming hard to get. We just saw Sprott fairly easily procure over 2 million pounds so far from their last financing. It moved the price in the beginning, but the price settled back. I mean, it's a clear indication that if you need a couple million pounds in the spot market, it's gettable, and it doesn't necessarily move the price that much. So there still looks like there's some inventory to clear up, but when we do, I think we're not going to get a lot of warning, and when we do, it's going to move really, really quickly. So I'm an 18-month guy because I've been watching uranium forever, and but it's really hard to read. It could be 3 months. It's just, unless you're trading in the market every day, it's very. Even still, I think it's hard to read.
There's a huge amount of gamesmanship in the spot market on both sides of the equation. So that's something that, unfortunately, the uranium equities, particularly the junior equities, really track the spot price quite closely. Should they? Maybe not. But it's something where I really think that there's an underappreciated aspect of just how much volatility there is in the spot market relative to the term. The term merely is the real price, as we've all talked about on many different forums, and I really think that the term price, as we start to see, as Colin mentioned, the tech companies come into the market for funding new reactor builds. We've seen a huge run up in terms of the share price of the nuclear related companies, the equities that trade on there. We have not yet seen the same in terms of the junior and intermediate uranium exploration development companies. The producers have rebounded. They're flat up small on the year now, but the nuclear related stocks are up massively on a year-to-date basis. That's going to flow through down to the uranium producers and the exploration developers at some point here in the future. It just has to.
Yeah, all good points, gents. Before we go to company developments, Greg, just one other question. You've highlighted the growing utility concerns about the future uranium fuel sources for nuclear expansion. How do you see the interplay between traditional utilities and emerging demand from tech companies?
Yeah, it's going to be really interesting to see how that plays out, and I don't know what the answer is going to be. I think there'll be some level of cooperation initially, and we're seeing that in a number of the deals that have been announced. But I do think that the traditional utilities and the traditional grid is going to struggle. To support the amount of electrical demand that's coming through the pipeline. So I really think that you're going to start to see the technology related companies look to sole fund their own supply, so they're not reliant upon the grid itself, because it's just too fragile in a lot of cases. And I really think that's something that's yet to play out here as we start to see that happen. And then they'll look to do their own procurement from sourcing the fuel. And really, we haven't seen that shoe drop. It's coming at some point, and when it does, I really think that's going to be an important development.
Sure. Let's move to transaction details between your companies. Colin, the acquisition of nuclear fuels by your company is valued around 102 million, if I remember correctly. That is your second major acquisition in 12 months. Can you walk us through the strategic rationale behind this merger, particularly how combining nuclear fuels Kaycee project with your Cyclone project strengthens Premier position as a leading uranium explorer in the United States?
Yeah, for sure. I mean, the strategic rationale for us is, well, first of all, nuclear fuels is one of the leading candidates in our pipeline. It's a company that we're really attracted to because of the Kaycee project primarily. It's situated in the Powder River Basin. It's just west of two operating ISR processing facilities, and that is analogous to our Cyclone project in the Great Divide Basin, where we're sitting just west of two licensed processing facilities. One's a conventional mill that at some point in the future is expected to be converted to ISR, and we're 12 miles west of the Lost Creek processing facility. So I think strategically, first of all, Wyoming, there's synergies in just operationally understanding the regulatory regime in Wyoming, so Wyoming makes sense. assets within proximity of in existing production, very attractive, and then the prospectivity of the asset itself. There's a 43-101 technical report on Kaycee indicating a resource exploration target of 11.5 to 30 million pounds. I mean, at the low end of that, you're certainly looking at something that would. We've seen recent economic studies that suggest that could be a standalone ISR production operation, but for sure, I think it could be in the current uranium price environment a satellite facility to an existing producer. And I think that the timing really shapes up for those kinds of assets really well. You're talking 2 or 3 years to explore and delineate a resource, and then I think that the existing neo producers in the state, proximal, are ramping up production, looking for additional sources of feed, and I think the alignment there could be really, really well. So we like both. We like the project in Wyoming because we're already in Wyoming and we have some expertise there. We like the team that's operating there. They've been very, very successful drilling a huge amount of feet in 2023 and 2024. So really attacking the project. The company's ability to raise money around Kaycee is further validation of the thesis that it's an attractive asset to develop. So whole bunch of reasons why we want to be in Wyoming. We more than double our footprint there with this acquisition. We increase our resource exploration target on the low end by 150%, on the high end by 250%. So just a huge number of reasons that nuclear fuels is a top priority for us.
Okay, Greg, the merger offers the nuclear fuels shareholders 54% premium and 41% stake in the combined company. From your perspective, what are the key benefits for nuclear fuel shareholders in joining forces with Premier, and how does the strategic backing from investors like Sachin Cove, ISO Energy, Encore Energy enhance the deal's value?
Yeah, and I'll start with the latter. For me, the shareholder base of Premier American Uranium was one of the real key sort of important factors from a nuclear fuels perspective, because of the strength and depth of capital markets experience that those shareholders bring to the combined entity. I think one of the key things that I've learned over the course of the last 12 to 14 months of running this company is it's all about the access to capital. In terms of keeping junior companies in mining in general funded, but specifically as it relates to uranium, where you have sort of waves of investor interest. So for me, we were very strategic at Nuclear Fuels when we raised our capital when it was available, and we really think that combining with the deep pocketed shareholders in Sachin Cove, one of the leading investor funds as it relates to uranium, ISO Energy, Mega Uranium, very, very long-standing entities within the space with strong treasuries, and then combine that with our large strategic shareholder Encore Energy at 19.9% of Nuclear Fuels. We really think that brings together an unparalleled shareholder base within the junior uranium exploration development sphere. So that was something that for me brought a lot of resilience and to the combined story. And then as it relates to the combining the assets of the two companies, we saw a lot of synergies, as Colin went through in quite a bit of detail within Wyoming. We really like the company's Cyclone project. We think that there's good upside there and lots of synergies operationally, both with the other assets local to them, and then some of our other projects outside of Kaycee as well. And we're already starting to talk about how we can start to bring those together between the two companies. And then further to that, I really think that bringing New Mexico into the fold from a nuclear fuel shareholder perspective was a very strategic move. We like Sabaita as an asset. We think it brings 43-101 compliant pounds to the table to nuclear fuel shareholder, and ending up with 41% of the combined company, I think is a very, very good win for shareholders of nuclear fuels, along with 54% premium at spot that you mentioned.
Yeah. Colin, how did you ensure that the deal structure aligns the interest of both companies' shareholders, and what challenges did you face in negotiating this agreement? Tell me more about the process.
I mean, it's exactly what you think it is. How do we ensure a fair deal is a back and forth negotiation, and it's a tricky process as we mentioned because it doesn't happen overnight. And in the period when we're negotiating, both of our stocks were moving all over the place. So it's a matter of figuring out what's fair from a valuation perspective. And what rewards shareholders for the money they've invested in each of the companies in the past, and how strong of a company it makes combined. I really think that, as a pro forma $100 million company, it's a much stronger platform to go out and do further acquisition, but also to raise money around the assets that we have that deserve pretty aggressive exploration. You want to be able to raise $10 million without it being 30% of your company's valuation. In terms of just creating a stronger platform for both sides. I mean, this was important to both Greg and I, and we think we've accomplished that. But the process was a lot of back and forth. There's an incredible amount of due diligence that goes both directions when you're acquiring a company. Both companies open up the doors for each other and take a good deep look under the hood. And that's a big part of the process. So once we get comfortable that with the kind of underlying mechanics of the companies, then we talk about valuation, and it's a process. It's hard to describe other than to say it's negotiations and due diligence that really dictate the final outcome.
We were really focused on growing, our individual companies, and we're bumping into each other in terms of strategic processes out there. So it was really something that, it made a lot of sense rather than compete with each other over, potential incremental assets to join forces, lock arms, bring together, our Kaycee project, one of the projects with the most potential exploration upside, and a strong balance sheet with Premier American Uranium's deep shareholder base and more advanced asset in New Mexico with a pending PEA, which we're really excited about the potential for later on this summer. So I think it really, brings together two exciting aspects of the various companies, for the combined shareholder base to benefit from.
Yeah, gents, the combined portfolio now includes 12 projects across Wyoming, New Mexico, Colorado, Utah, and Arizona. You have a resource base of 18.6 million pounds of U3O8 and indicated almost 5 million pounds of inferred at Cebuleta. What are your immediate priorities for advancing the Cebuleta project and Cyclone project, and how do you plan to balance resource expansion with the development timelines? Colin, please.
Yeah. We just announced that Cyclone that we commenced drilling just in the a week and a half ago, and Greg's been drilling at Kaycee. So we got two active drill programs for a lot of combined footage in Wyoming. More drilling happening than in any other exploration U.S. exploration company that I'm aware of right now. So there's going to be a lot of news coming out of those assets. And in the background, we're working on the PEA and a resource update for Cebuleta. That's a negotiation in itself. Once you get a draft version of it, you're working with the independent technical group to kind of shape what a production profile should look like, talking about different development strategies and so on and so forth. So there's a process there, but I think that once we have the PEA and resource update out of the way, that's when we'll really assess what the advancement strategy should be for Cebuleta. I really want to let the economics determine how aggressive we are about advancing it. So we know what the probable pathway is for advancing Cebuleta. The next steps there would be additional resource expansion drilling and some core drilling to advance the metallurgy to move towards a PFS perhaps, or another resource update. But it's pretty prescribed, how to advance it post PEA. You can get a good look at that by looking at the technical report where we define that 23.5 million pound resource that you talked about. It kind of lays out a series of recommendations, and several of those they're sequenced and we haven't completed yet. So that will most likely be the kind of pathway forward for that. And at the same time, we'll look at different permitting options to start to advance that project. So, and yeah, like I said, we're already drilling on Cyclone and Kaycee, and that's really results driven as well. Depending on how the results come back, that's going to shape the rest of the drill program and the future drill programs as we work to kind of start to isolate and delineate and vector in on resource.
Of course. Greg, how is the drilling program at Kaycee going? I'm particularly with the recent discovery at outpost and trail dust zones. How do you see these efforts contributing to the combined company's resource growth?
Yeah, in 2024, we really focused on the confirmation with infill drilling and extensional drilling of the historical resources to try and grow the resource base that way. Towards the end of the 2024 program, we pivoted that into more looking for new discoveries, particularly in the eastern aspect of the property area, and that's where we were successful in outlining the new discoveries at both outpost and trail dust, and that's where we started off this year's drill program in just over a month ago. Looking at trying to delineate what those two areas had from a potential mineralization perspective, following up on last year's successful drilling. What we've done now is sort of move on from those because we were able to secure some additional areas to drill with surface use agreements. So we're testing some other prospective areas in the eastern part of the project to try and make additional new discoveries, and we're very excited to continue on with that program of a minimum of 100,000 feet worth of drilling over the course of Kaycee in the coming months.
Of course. So what will happen with the TenSleep project in Wyoming? I mean, that one is pretty interesting with geological similarities to Athabasca Basin deposits. What's the plan over there?
Yeah, and something we're really excited to continue to advance towards a drill decision. So we're hoping to get some drilling there later on this season. But again, that will be predicated upon what happens at Kaycee. If we're on to something really exciting at Kaycee, we'd probably keep the drill there and evaluate TenSleep. But yeah, it's something that definitely needs to be drilled. Is similar to Kaycee, missed out really in the 2003 to 2008 cycle and hasn't had any real exploration since the mid to late 70s.
Okay. Colin, can you give me an update on the remainder of the portfolio from Premier American Uranium?
Well, outside of Cyclone, where we're drilling right now, and outside of Sabieta, the Colorado assets are kind of the primary assets that are not part of the primary assets. So they're secondary and that they're not the subject of big work programs in 2025. We haven't made a decision yet about 2026, but I really like the assets, and I think that at some stage there'll be either fantastic negotiating pieces in a transaction to increase our footprint in areas where we have focus. There's groups out there who are focused on the Ravan mineral belt, and those are some very, very attractive projects in that area. But we're working 2 and about to be 3 projects, and I think that we're trying to direct the money where we think we can create the most leverage and expose the most value for shareholders. So the Colorado assets continue to be held strategically, but there is certainly a scenario where we would either work them or possibly negotiate or trade on them to change our portfolio a bit. So that's about it outside of the programs that we're working.
Okay, Greg, post transaction, the executive team will be led by Premier team. 2 board nominees will come from from Nuclear Fuels. Can you clarify your role post merger, and how do you plan to contribute to the combined company, particularly leveraging your extensive experience in mining analysis and investor relations?
Yeah, absolutely. I'll be one of the 2 nominees for the Premier American Uranium board from the nuclear fuel side. The second is still to be determined. And people who know me know that I'm very hands-on. I always have been at Canaccord in a mining specialty sales role, on all aspects of the investment bank. It's continued on to be very hands-on here over the course of the last 12 to 14 months at Nuclear Fuels. I spent a lot of time down in Wyoming at the Kaycee project, very hands-on, and I hope to continue to that from the position on the board through the end of the drill program, and look to be a very, very active director beyond that, helping Colin with evaluating strategic opportunities and as well as the day-to-day, because we do see, Colin mentioned some of the the exciting stuff that they're looking at. We had a number of things that we were also looking at, so we really think from the combined company basis, we've got a real opportunity to further build the portfolio.
Okay, Colin, the combined company will operate in multiple uranium-producing regions, New Mexico Grants Mineral Belt, Colorado's Uravan Mineral Belt. How do you plan to manage the differing regulatory and geological challenges across this jurisdiction?
From a regulatory perspective, we have consultants and laymen who handle that. We're very kind of regimented and scheduled around kind of maintenance of claims and fees, and we're always evaluating the portfolio to see if there's efficiencies that could be had, or areas that we've kind of sterilized that we don't need to prioritize anymore. But it's really a process of going out and exploring and determining the potential of areas. And we have a very deep and experienced geological team. We're also inheriting a very tenured team with Nuclear Fuels. So we're looking to make the best of our existing team and the expertise and the data that comes along with Nuclear Fuels to continue to do what we've done, which is be very strategic in our approach to and efficient in our approach to looking for uranium and creating value through that. It's hard to describe it any other way other than we're relying on our deep technical expertise to make the absolute best of the potential in our assets that we can.
Greg, with your experience in Wyoming and other mining jurisdictions, how do you see the combined company balancing its focus between ISR amenable projects in Wyoming and the conventional mining potential in regions like Colorado and Utah?
Yeah, I think it's a real benefit to have a foot in both the ISR camps as well as the conventional camp. I think with the push from the current U.S. administration, and even from a bipartisan perspective, going back to the Biden administration, uranium production needs to ramp up in the U.S. and it's not just going to be conventional, it's not just going to be ISR, it's going to be on both fronts. So I think from our perspective, with the strong technical team that Colin mentioned, between the two companies that will come together, that gives us an incredible basis to explore both conventional as well as ISR amenable properties. So I really think that gives us a bit of a unique edge over a lot of the other companies out there, and particularly as with our existing asset base as well as potential new additions to it.
Okay, Colin, final question. News flow from the company. What can we expect next?
I think Nuclear Fuels just circulated their meeting materials in circular for their vote, which is going to be August 13th. In the meantime, with Kaycee being drilled pretty aggressively and Cyclone being drilled, we expect to be able to generate news flow drill results from most likely Kaycee. That's really up to Greg at the moment, but historically they were pretty kind of incremental and predictable kind of cadence to their news releases regarding that drilling. And with our program at Cyclone, what we should be putting out probably mid-program and end-of-program drilling updates, and I think so. We're probably next couple of weeks we'll update on how things are going at Cyclone. Things are going very, very well there from a drill progress perspective, and I don't want to disclose that yet what kind of results we're getting, but we're looking forward to being able to update the market. I just think that releasing those in batches rather than one hole at a time is more prudent and gives people a bit of perspective around each press release to have more than one hole, despite the temptation sometimes to do that. So I think we're going to fill out the year pretty nicely with drill results from two projects with a lot of feet being drilled, and then at the same time, depending on how quickly we can kind of wrap up the PEA sometime this summer. We should have the PEA and the resource update out for Sabieta. So it's a pretty full news docket between here and the end of the year, working 3 projects between the 2 combined companies.
Yeah, is there anything that I forgot to ask that you would like to address to my audience, Greg?
I think we covered most of the aspects. I think for me the combined entity is much stronger than the individuals on their own. So we think it's a great transaction for shareholders of both sides, and really provides us very solid balance sheet with a very robust suite of properties, all focused in the U.S., which again I think is probably the jurisdiction with the most government support for building out both the nuclear infrastructure as well as the supporting fuel cycle.
Final thoughts?
Yeah, I would agree. I think that creating a larger platform to go out and do what we want to do is going to allow us to accelerate the portfolio building. Go for the premium assets that we would like to see inside the portfolio, and create a company that generates more news flow for more months out of the calendar year, and overall just make what I think is going to be the go-to company for exploration development focused in the U.S. So we're excited to get the transaction done, which, by the way, we expect to be around the end of August for close.
August. Okay.
Yeah.
We will stay tuned. Greg, Colin, thank you very much for joining me today.
Yeah, you're quite welcome. It was a pleasure.
Thanks, Lucian.